Illinois. It is Monday, March 8th, 2010. Choppy trade was expected today in the grains, and that's pretty much what we got. After finishing slightly higher in the overnight markets, we came in this morning to see crude oil up over the $82 price point. The dollar was lower by about 20-30 points, depending on what time you were looking at the quote, and we were getting pretty bulled up for the opening of the grains. Well, shortly after the grains opened, we did see crude reverse itself and pull on back, get negative on the day, and the dollar started to strengthen up. Hence the choppy trade in the grains. Not to mention the fact that we have a report coming out on Wednesday. There's not a whole lot of interest on either side. A lot of guys are trying to get neutral ahead of the report to see what the USDA is going to tell us as far as their revisions regarding carryout in corn, beans, and wheat are going to look like. Again, we find that out on Wednesday morning. Feel free to call in to Allendale after 7:30. That's when the report will come out, and we'll need a couple minutes to compile the numbers and make heads and tails of what they're telling us. But shortly after 7:30, feel free to give us a call here. We'll be more than happy to go over exactly what the USDA did tell us on that day. So where did we end up? Well, corn, the May contract, $3.75, down half a point on the day. Soybeans were up 5 1/4 at $9.48, and we had wheat finish up 1 1/2 at $4.95. So as you can see by those numbers, not a whole lot of activity. Grains, of course, did open higher. There was an opportunity to sell higher prices in these grains, specifically soybeans. 52 3/4 went up and took a look at some resistance up there and did close below that resistance today. Currently, the dollar's at 80.45, down only a tick on the day, and crude oil up 31 at 81.81. We do have some resistance in that crude chart up above 83. There are several analysts out there talking about the fact that we're going to go test that out. When you see the crude move, be ready to own that corn if you don't already. The corn, of course, does watch the crude market very closely, as does wheat watching corn. So those are two commodities you may want to take a look at getting some ownership on if you do believe that we are going to go up and test that resistance up above 83. Over to the livestock today. Cattle, big day in the fats. We are at 94.20 is where settlement was on that April contract, up $1.25. Feeder cattle is up 32.5 in the March contract at 102.52.5. Money flow is the reason for this. You got the funds in the cattle market right now. They are buying. The trend is up. The feeder contracts are trending much higher. Demand really hasn't come back into this market. There's arguments out there that the supply and the liquidation that we saw in the herds may have been overdone without the demand, and now that we're seeing export demand issues, I think that this market is overbought right now, and the technicals to some degree also agree with that statement. It does look like it's overdone. Cash market for the third week in a row, we saw $92 cash sales in the cattle, and we'll see, how much higher they want to push this. Get your hedging done. Allendale does believe that the top is near, and we would like to get the hedging done and then wait on the more deferred contracts before we hedge those. Allendale is working up a strategy for the more deferred contracts. Hogs today down 30 cents at 72.80. Again, the primary focus was on the cattle market today. If you have questions or want to talk to an Allendale broker about some of our hedge strategies, or you want more information about the meetings that we're going to be conducting across the Midwest, specifically Ames, Iowa, Lincoln, Nebraska, and Iowa City over the next couple of days, give us a call, 800-262-7538, or feel free to visit us at the website www.allendale-inc.com. Again, this is Bob Dalton. Have a very successful trading week.